Good evening, everybody. I hope you can all hear me. It's Trish from FCN here. I can't see myself either, so that's not a bad thing. Thank you for joining us. I'm just going to give a quick introduction, if I can, to our colleagues here from Hawsons. So the gentleman that's going to be speaking to us this evening is Dan Wood. Dan is a chartered accountant and a partner at Hawsons, and he works very, very closely with the farming network and the agricultural network, I should say, and agricultural businesses. He often helps family-run farms and rural enterprises navigate some complex things. So basically, he's the man. Dan is the man. So I hope that you're going to enjoy this session this evening. It's so well attended. I can't thank you all enough for coming on to this, which proves just how important this topic is. So I shall hand over to Dan and I shall put myself on mute. And I thank you, Dan, for doing this. It's really appreciated. So over to you.
Thanks, Trish. I've got a lot to live up to with that introduction. I think you've probably stolen my thunder for the first couple of slides, so I may be able to skip through those. But yeah, for everyone else attending, my name's Dan Wood, agriculture partner for Hawsons. Been dealing with agricultural clients for the last 10 years or so now. Stepped up into that agriculture partner role about 5 years ago. We currently act for approximately 70 farming businesses, and then probably taking us up to 100 with sort of diversified businesses on top of that. Generally, they're family owned, family run. But we get a real cross section of ownership, and sometimes it's multiple farming enterprises coming together. Sometimes that doesn't always work out, and we have recently separated a few of those, dealing with a couple of demergers, but I'll talk a bit more about those in due course. So just to give you a bit of an idea about Hawsons and sort of the size we are, we're currently 3 offices: Sheffield, Doncaster, and Northampton. We're an independent partnership, so that does help us from a farming perspective because we understand, a lot of our farming clients are still run as partnerships. So, understanding those partnership dynamics, living it yourselves really does help in that. We're also a member of the Rural Accountancy Group. So that's a group of 10 other accountancy firms across the country. We get together twice a year, compare notes on best practice, talk about what we're seeing, what tax cases we're seeing, and also, how best to help our clients. It's always handy to have, somebody else there to pick the phone up to if we need, because usually somebody within that group's seen the situation that we're looking at. We're a full service accountancy practice, so run through from accountancy, tax, financial planning, and generally we can deal with it. We also have a corporate finance team that specialise in buying and selling businesses. Farming is a little bit more specialist, but we've sold a couple of farms recently, fairly successfully. So in terms of what I do, as I've already mentioned, I'm a partner in the Doncaster office, so I look at succession planning, inheritance tax, business structures, really those more strategic issues. I usually work closely with a couple of our team, so we have 2 agricultural accounts managers that I work with who manage the day-to-day relationship and the compilation of the accounts. I tend to get involved at that more strategic level. I'm sure it won't surprise you, the last couple of years I've spent a lot of time looking at succession planning, inheritance tax. Tonight isn't necessarily about giving you all the tax rules. It's more about around those discussions around succession planning, what you can do when you're speaking to people in terms of signposting them to people like ourselves, and then how, ultimately how we can help. A bit more background: I sit on the board of the ICW Farming and Rural Business Advisory Group, which is a mouthful, but we help shape policy, so we feed it direct into HMRC on consultation. So the current one is for around directors' loan accounts and reporting those on a quarterly basis, so we've been giving some feedback on that. And as we've mentioned already, I represent Hawsons on the Rural Accountancy Group. So that group covers about 5,000 farming businesses across the UK, so a real cross-section. We cover both England and Scotland. Unfortunately, nothing in Wales as yet, albeit some of those member firms do sort of go into Wales a little bit. So I suppose the question of why we're talking about succession planning, it's one of the biggest challenges facing farming families. According to the NFU Mutual, a few of them, 4 in 10 farms have a formal succession plan in place. I dare say that statistic's slightly outdated. I think the changes brought about in the budget a couple of years ago have really brought it to the forefront. So, we've been having a lot more conversations with our farming clients about how land, how the business is passed down through generations. The problem we sometimes have is you've got competing objectives. Can't always be inheritance tax driven. There are other taxes at play, and also the practical day-to-day running of those businesses. Many families know that it matters, but ultimately put it off. It's not a pleasant topic to think about, your own mortality. And it's probably the most difficult thing we advise on, because we can set out all the tax rules, but ultimately it's there for individuals as to how they feel. We get the whole cross section. We get some that get to 50 and want to give everything away. We get the other end of the spectrum where they're in the 90s and think ultimately it's not going to be their problem. Typically, clients are somewhere in the middle and want to take sensible steps to plan around inheritance tax. So it's really around guiding them through that process. The longer it's left, the fewer choices remain, and poor planning can put strain on those family relationships. The financial security, so this is something that the banks are taking quite a lot of interest in. I think it was Barclays I was talking to the other day, and they're putting some specialist finance in place to help aid this succession issue that's been brought around by the budget. The future of the farm, obviously, the goal is quite often to keep the farming enterprise, together. But it could also be looking at, actually, this is getting out of hand here, and it would be much more manageable if we split it into 2 farming enterprises with 2 distinct family groups managing those. And again, we're looking at that inheritance tax exposure and balancing anything we do against other taxes. So usually capital gains tax, stamp duty, land tax, but income tax can also come into play when, we've got to look at, you can't just move the asset, you've also got to move the income that's linked with that. So we've seen this a lot recently. What happens when succession is left too late? It then becomes a knee-jerk reaction, or, in some cases, there's just nothing we can do. So decisions made during illness or crisis aren't necessarily the best ones because they're made under duress. So I've had a case recently where we've looked at, after the person's passed away, they didn't take any tax advice on it, and it's certainly not what we would have advised, because we're now having to unpick it, try and vary some of the terms of the will, not because we want to do anything untoward, but actually because what's happened isn't necessarily what that person intended to happen. Ultimately, sometimes that does lead to disputes. So we work with colleagues in the legal sector when it does turn nasty, and contentious probate is a massive area, and one that's unfortunately growing. Things around proprietary estoppel claims, where people claim, one day, son, this will all be yours, and then they're left nothing in the will, and have relied upon that to their detriment. So, we do get involved in those disputes as well, albeit that's probably the less pleasant aspect of what we do. It can also raise questions over unclear ownership. All too often we get clients coming in saying, I've transferred this to the son, or I've transferred this to my daughter. And, sometimes that's on a piece of paper, that's not necessarily being followed up with the legal paperwork. So, we then have to make sure that all that's in place. Ultimately, anything like this has to be defensible to HMRC were it to be looked into. And unfortunately, in some cases, when people haven't taken proper advice, it can lead to unexpected inheritance tax bills. I suppose taking that step back, that can also happen when people die unexpectedly. And, we can only plan so far. So sometimes, we may have instances where families die in an order that isn't expected, but we do what we can to try and prevent that. Ultimately, there's then tax liabilities can arise from that, and that can mean that land, ultimately has to be sold to pay those tax liabilities. There's been a lot of coverage around inheritance tax and the fact that, farming businesses should have 10 years to pay that. But in some cases, people will just want rid of that burden. And that can also place pressure on the next generation, particularly if they're having to sell off land, and then on the basis that that farming structure's been created optimally, and the land's all set up in a way, and then all of a sudden you're not getting the same output from that land, albeit you've got the same asset base. That can put stress and pressure on debt servicing and things like that. One thing to really stress here is that starting early doesn't necessarily mean handing over the farm all in one go, or even at this point. It's just about having that plan, about thinking about it, and understanding, when things are going to happen, what the plan ultimately is. And that's not to say that plan won't change over the years, because businesses develop and things change. But really, just having a regular review on that, can be key. Certainly with a lot of our clients where we have discussed these things, it's almost a standing order on our agenda when we meet every year now. How are we performing in the short term, looking at those accounts? What are the future plans? And then, what are those longer term plans? Are we working towards it in the right way? Does anything need to change? Has a parcel of land changed over? And also in some of these cases, what we've done is we've looked and said, well, actually, the farm's so fragmented, it just doesn't make sense from a business perspective. So how can we rationalize those land holdings to, bring the farm together, keep the bits that are working, recycle the bits that aren't, and maybe sell those on and buy some closer to the farm. So, it allows us to look at that short, medium and longer term aspect, really. So it's worth stressing that, when people think about succession, they think a lot about the paperwork, which is obviously important, about the ownership structure and about the tax situation. But really, it's more fundamental than that. It's about just having a plan in terms of what ultimately will happen with the business. I think getting that plan set out, initially is really important. That plan can then be shaped by the ownership structure and the tax situation. But at least if we can understand from a client or an individual what they want to achieve, we can then advise on how that happens. It's about having that clarity, that communication and fairness. When we're looking at fairness in farming families, that doesn't necessarily mean equality. It's important to note that, some siblings or some family members may be more involved in the business, and they, ultimately should get more reward for that. And there may be other assets at play outside that farming business that they wish to leave to other family members. It's about understanding the financial position, the banking position, and making sure that there's security there for the continuation of the business. I know we say it's not about legal documents, but it's also important to have them there. So one of the common issues we see at the moment is when a farming business doesn't, a traditional partnership doesn't have a partnership agreement, and that partnership, one of the partners dies. Without a partnership agreement, the default position under the Partnership Act is that partnership ceases. The bank take that quite literally, and what they will do is they will freeze the account, whether that's in credit or overdrawn, and then it's about setting up a new bank account. It's not necessarily a really difficult fix, but it's certainly one that can hamper the operations of the business in the short term. And again, having that clarity allows those family relationships to continue, hopefully on good terms. If everyone understands what's about to happen, then it certainly makes those conversations a lot easier in lifetime, rather than leaving somebody a shock afterwards. And ultimately, at the core of all this, it's about protecting the future of the farm. So really, from your perspective, it's then, well, how do we start that conversation? And quite often, the initial conversations I have with clients, that they're all over the place. They have a lot of ideas. They're not necessarily all coherent or all in agreement. It can be that they want to do this, but then they've got a competing idea where they'd like to do something else. And it's just in the first instance about talking through it with them, getting those ideas laid out, and then working out which are feasible, which aren't. Is there any variation needed? Is there any further thought needed on certain aspects? In terms of good starting points, speaking to a spouse or another family member, can be really important, just to try and get those thoughts down. Obviously, yourselves as advisors, you may be that point of contact in some cases where they feel more comfortable talking to somebody who's a little bit more impartial rather than somebody who's wrapped up in the farming business. Picking timing is quite important. I mean, I was talking to a client the other day, and the recurring conversation with them is, we need to sort inheritance tax out. That's the case every time I speak to them, but then they've always got something more important to deal with. The fear there is that there'll always be something more important until this is in that time of crisis or that time of pressure, and at that point the options might be limited. Focusing on the worries rather than the solutions can be really important, because actually some of those fears may be allayed. But it's not necessarily about having to come up with answers for everything in one go. It's about shaping this, really. And when you're talking to these individuals, trying to let them speak and get work through that rather than guiding them in that initial phase can be really important, because otherwise you could steer them away from something that's actually at the core of it. They're just trying to get there. So questions that volunteers can encourage farmers to think about: what worries them most around the future? What would they like to happen longer term? And that I know we've talked a lot about the continuation of the family farm, but actually the ultimate goal might be that there is no succession, or that succession's a lot less clear, and it's then about what do they do. We're helping a number of clients who have ultimately decided that the succession isn't there, and they want to realize the value in that farm, to then go off and do other things with that money with family members, quite often property related or setting up another business. But just understanding what that longer term picture looks like, rather than assuming that the key really is securing the future of the farm. But also what they want to avoid. So it may not be that they have an optimal solution, but there may be some things they really don't want to happen. They don't like the sister or something like that, and they want to keep that value away from them. So it's then, right, how can this be structured in a way that can ultimately let them realize that? So in terms of looking after the older generation, one of the biggest fears, and I think this has been drilled into the farming community, unfortunately, is what happens if they step back. One of the things I was constantly reminded when I came into advising farming businesses is that farmers don't retire. And that's been an unfortunate byproduct of the recent tax rules up until that budget, where actually agricultural property relief and business property relief meant that they were better dying holding that asset rather than thinking about proactively passing that on. So we've it's not uncommon that we've got a lot of partners who are in their 80s and 90s, not necessarily involved in the the day-to-day activity of those businesses, but still very much involved in the partnership. And I'm not saying that's wrong. Certainly, that's one of the things that we're keeping under review, and it's not necessarily where we've retired of all of them, but it's about understanding what that picture looks like. And, it may be taking some steps to reduce their interest in the business, or make use of their allowances. And, certainly I've got a number of clients where the elderly parent holds all the land. Now, if you look at that, even in the context of a 5 million APR band, that would put them far in excess of that. So what sensible steps could be taken to distribute that to some of the other partners, to some of the family members? But it's really about talking through it with them. They'll worry about losing purpose or control, that financial security. So really setting out to them what that looks like afterwards, whilst being sort of understanding of the tax situation can be really important. So we've got one client where the land all passed, but they continued to live in the farmhouse. They were given an allowance for working in the business, a wage for working in the business that wasn't necessarily linked to that land holding, but it gave them that security to understand that they could step back from certain aspects of the business without being left destitute or reliant on just their pension alone. And again, looking at how we can support those multiple generations who often have competing interests. I think one of the difficult things we've noticed is that we had a few situations where landholding partner was in their 80s or 90s. The son was in his 60s, and then grandson, if you like, who was doing most of the day-to-day running of the business, was in the 40s. And when we looked at that in the context of the new inheritance tax rules, actually the best advice was to pass all that to grandson and skip out son. Son's obviously been working in the business for the last 40, 50 years alongside his father, and it doesn't quite feel equitable that he never then ends up with an interest in that land. But when we worked through from an inheritance tax position and and ultimately the wider business position, the best thing to do in that case was to skip him out, because we could then insure against that land and the potential inheritance tax liability on grandson, who was much younger, and the premiums were much more affordable. So I think the practical side is probably something that yourselves as advisors and volunteers will get a little bit more involved in, or certainly talking through, not necessarily advising on this. But I think, quite often the key here is really making sure everything's in agreement. So that's looking at the will, the partnership structure, any shareholders agreements, partnership agreements, the land holdings, and making sure they're all consistent, because consistency here is really the key. We advised on a client about 5 or 6 years ago, where unfortunately one of the partners had passed away. Everybody knew what should happen in that situation, but unfortunately the partnership agreement and the will didn't quite agree. And in that case, the partnership agreement took precedence from a legal perspective, but the will was really the one we wanted to follow. And fortunately, in that scenario, that all the family members were in agreement on that, and we were able to take steps to get that changed. But it certainly wasn't a quick process, and it certainly put undue stress on that farming family at a time when they really could have done without it. And I think one important point to note here is that ownership and control are not always the same thing. So there's ways that it can be structured to make sure that land ownership is passed down while control is maintained. But there are certain tax rules we just have to be mindful of there. But certainly looking at how land ownership could be gradually handed over is something that you could build into a plan there, really. I promised I wouldn't talk about tax too much, but certainly in terms of the tax side of succession planning, the big financial issues that have received a lot of coverage at the moment are inheritance tax, agricultural property relief, business property relief. The sort of forgotten ones tend to be capital gains tax and stamp duty, because in moving land around, we can sometimes trigger capital gains tax, stamp duty liabilities. And it's really about making sure that we're doing it in a way that doesn't trigger those. So from a capital gains tax perspective, gains can be held over, provided certain conditions are met. And again, with stamp duty, certain exemptions can be taken, but that needs proper thought putting into it before things are done. The worst situation for us is a client coming to us at the year end saying, "I've done this, this, and this," and you're having to unpick it, because from our perspective at that point, sometimes it can be too late. The reliefs generally depend on timing, ownership, structure. But again, that early planning, that early engagement can create more flexibility and more opportunities to plan, really. So a brief overview of inheritance tax. So the standard rate is 40%. Each individual gets a £325,000 tax-free allowance. Additional allowances may apply. So there is what's called the resident snow rate band, which is an additional 175,000, but that is subject to a taper depending on the size of the estate. So if the estate's exceeding 2 million, we'd have to look at that taper. The 325, they effectively can't take that away from you. There's then additional reliefs that tend to apply to farming businesses. So agricultural property relief covers the agricultural value of that land. And again, there's certain qualifying conditions there. But really the key message for yourselves is, good planning could reduce or remove that inheritance tax exposure. So APR applies specifically to agricultural land and buildings, and there are key definitions around that. So quite often we'll end up with assets in a farming business that aren't agricultural, and we have to sort of strip those out and then apply business property relief, provided they're used in the business. But things to look out for property letting, diversified income, those two can prejudice some of these reliefs. So it's about making sure the business is structured in the correct way to make sure that they're ultimately allowed. Certainly, all the assets being owned by one person can cause an issue, because that just tends to bump up their value, and increase that chance of exceeding the 2.5 or the 5 million if they're married. No wills and outdated partnership agreements. So quite often, when I take a client on, we do a full review of this, and it turns out that the partnership agreement was written 20 years ago, and partners have come in since that, partners have retired, and there's never really been any consideration. It could also be that the asset base has changed, and one of the key provisions in those partnership agreements is really setting out what should happen to the assets, and making sure that those assets are correctly accounted for. So what does good look like? Common features are those regular conversations. So not just making a plan, sticking it in a drawer and forgetting about it, but regularly revisiting them, making sure that as the business develops, as the business changes, that's revisited. We're seeing a lot of diversification in farming businesses. We were recently at the RAG conference, and it was interesting that actually the primary focus, when we did a feedback session, has shifted from inheritance tax to farm profitability. So looking, certainly the farming business that we went out to see and do a farm walk on, they're more worried about how they're going to fund the next 18 months rather than what happens in 20 years' time. And I think now that those rules have settled down, they're comfortable that they've made provision for that, and it's back to focusing on that day-to-day plan. But that plan and generating more income means that the business will shift. So, they're looking at additional revenue streams and how they can develop that, how they can make use of the farm buildings, which again can change the goalposts in terms of the reliefs available. So it's important to keep, monitoring that situation. Making sure the ownership's clear. So certainly around us in Doncaster, it's quite well documented that there's a lot of unregistered land. So, making sure that the land is registered, it's clear who owns it, and when father says to son, "Oh, I've transferred that to," or says to us, "I've transferred that to son," that has actually happened from a legal perspective rather than just in his head. Making sure those wills are up to date, considering that gradual transition. It doesn't always have to be all in one go. It can be part of a longer term plan. And properly planning that retirement rather than just thinking, right, that's it, this individual stepping away from the business. What does retirement look like for them? I think one of the things historically we haven't seen a lot of is pension planning with farming businesses. And, the land's always been the pension from that perspective, and they've always expected to draw an income. But actually, with the changes to inheritance tax as a whole, is the right thing for them to continue drawing a profit from the business, or should they be drawing it from a pension or from savings to actually deplete that estate to a point where there's no inheritance tax or less inheritance tax to pay? Engaging professionals early is really important, and everybody not necessarily being on board with the direction of travel, but understanding it and having an opportunity to contribute to that. And as I mentioned earlier, fair doesn't always mean equal. So the role of yourselves as volunteers, you are not expected to be technical tax advisors. The amount of times we get clients coming in saying somebody down the pub's told them that they can do this or this. Sometimes that's right. It's not always. And, they don't have an overview of the bigger picture. Our difficulty there is we don't necessarily understand what, that own individual's situation is, because they could be coming from a very different perspective. Again, you're not expected to solve the legal problems. Certainly as a chartered accountant, I stay well out of those as well. And you're not expected to replace that professional advisor. Ultimately, these individuals, that need proper advice do have to pay for that. And, certainly ourselves and a lot of other accountants and lawyers will give a free initial consultation, but then they'll set out the fee structure in terms of what that looks like for us to carry out that work and, navigate them through this really. What you can do is start those conversations and get those individuals thinking about what they would like, reducing fear around the topic. So, I think starting to talk about it certainly helps. And making sure the family members feel heard, because it may be that one individual's trying to shape that, and other family members feel they should be able to contribute. Encourage early thinking, and signposting that professional support. So when that professional advice becomes helpful, so common triggers are no clear succession plan, retirement's approaching. What does that look like? That's quite often where we'll get involved. So quite often there's a farming business, they've been acted for by a local accountant, or somebody in the village has done the bookkeeping. It may be a family member's done the bookkeeping. And where we tend to come in is when that more technical advice is needed, that more strategic advice, and planning for that longer term aspect, really. Again, when diversification is at play, that can complicate matters. We don't like to get involved when there's ill health, because that can sometimes indicate that it's almost too late. But certainly sometimes people are just ill, not necessarily dying, and that does make them think about what they need to be doing from a succession planning perspective. Unfortunately, family tensions, as with any family business, can come into play. We do unfortunately have to deal with farming disputes as well as succession planning. So I know that side of the the industry all too well. Unclear ownership, who owns what's going to happen to that, and again, those concerns around inheritance tax. We've certainly seen a lot more of that recently. And again, speaking to an advisor doesn't necessarily mean committing to change. It just means understanding your options. It could even just mean understanding what your current structure looks like from a tax perspective, and then working that through to see what they could do for you. So in terms of Hawsons and how we could help, if you do want somebody to signpost us, we've got a specialist agricultural team, a full range accountancy practice, but we've also got a joined up approach. So we've got that wealth planning at that financial planning at the other end of it, who can advise on investments, on pensions, all that side of it. We do tend to, we have a fairly national reach, but if you do have an individual that wants some, that's not local to us, we can introduce you to other member firms from the rural accountancy group, to make sure that ultimately what we want is the best outcome for that individual, and that may be somebody that they can pop in and see, and Doncaster may not be convenient for them, or one of our other offices. So ultimately getting the right advice for that individual and making sure they're properly looked after, I think is part of our responsibility to the wider industry, and making sure really that we're doing our bit. And that's one of the great benefits from our perspective of being part of this group, that we'll get an inquiry that's not really on patch for us, and we can rely on that firm to give them proper advice. So good advice should feel practical, personal, and really understand the industry. Where a lot of other accountants do sometimes fall down is that farming industry, agricultural industry is very different to standard business, and they try and approach it like a standard business, and they almost become too corporate rather than acknowledging the family angle. So that's again where we've picked up quite a lot of work, because we do understand that aspect. So I suppose just to wrap up, as I mentioned to start with, succession planning is one of the hardest things that I advise on, really. It's rarely straightforward, and it's rarely linear. So it's not necessarily that we sit down on day one, we set out the plan. There's tweaks, there's revisions, there's further thoughts that people have had. Ultimately, it's not all tax driven. It's about the people. It's about the farming family, the farming business, and inherently there is a lot of emotion goes into it, because people are thinking about their own mortality, and the mortality of family members or colleagues. So we do. It is difficult to deal with in certain circumstances. But the earlier those conversations begin, the less pressure there is. And most succession plans just start with a conversation. That's really all we can ask from yourselves, and always happy to just have a chat with somebody if they're they're wanting some guidance, really. So I believe that's it from me. I suppose if anyone's got any questions, more than happy to answer them. I think I've got one in the chat box at the moment.
People are thinking, can we thank you, Dan, at this stage? That was really lots of really well presented information that will help us all as volunteers and staff at FCN. So I just wanted to thank you before anybody else did, because I really appreciate everything you've just done for us. So
No, that's not
questions
a problem.
straight. Thank you. And also, can I just thank Rob as well? Those of you that can see that there is Dan Wood and Hawsons, there's a lovely colleague of Dan's there that is overseeing all this for us as well. So thank you to Rob as well. So
Yeah, it wouldn't have
question.
happened without, from a technical perspective,
No, it
without.
wouldn't.
Thank you very much.
Yeah, thanks, Rob.
Right, question to Dan, and I'm going to shut up for now.
Okay, so we've got one question on the box so far. So from Mark Thomas, could you comment on the importance of a power of attorney, and also the importance of avoiding risk of reservation of benefit, where ownership of property might be transferred by a grandparent, but they continue to live in it rent free? So I suppose tackling the first point, power of attorney can be very important. So unfortunately, we do deal with clients that lose capacity, and family members need to act on their behalf. Getting that power of attorney in place before any of that happens makes life much easier. Certainly, if they've lost capacity by the time that's needed, it has to go to court, and the court of protection then have to issue an order, which makes life much more difficult. It's a lengthy process, and more importantly, can be disruptive to the family and to getting the best for that individual and the best for the business, really. In terms of avoiding risk with reservation of benefit, I think if you've got a property, I mean, I'm not a big advocate of necessarily transferring the properties unless it's absolutely necessary. We tend to look at what other assets can be transferred first. So the gift with reservation of benefit rules really came into play about 10, 20 years ago, when a lot of individuals parents were transferring properties down to children and then continuing to live in them as if nothing had happened. So HMRC's basic position on this is that they look through that. They would say that it's still part of the estate. The only real way around it is that individual who's gifted it then has to pay a market rent, which quite often when we tell clients that, they don't want to go down that route. I think, to my knowledge, out of the 70 clients I've got, I've only had one that seriously considered that as an option, and even they decided that it wasn't the right course of action, and we looked at other assets instead. So I suppose the wider point around the gift with reservation of benefit, this is something that we're spending a lot of time looking at, and I think it'll be an increased area of focus for HMRC. So looking at the gift with reservation of benefit, we're looking at that on a partnership basis. So where land's being gifted within the partnership between partners, they can't gift that land and then continue to take the same profit share. We've got to do something to evidence that there has been some transfer of benefit. So how we're typically tackling that is looking at a prior share of profit that's linked to that land. So that may be a market value rent on that land that gets taken out of profits first. Or in some cases, I've got one where there was a precedent within the partnership agreement, within the profit sharing arrangements, that there was already an allocation for land, not necessarily market value, but it was one that had been established over a number of years, and we were able to transfer that. So hopefully that answers your question, Mark, but happy for any follow-up on that. And I suppose, are there any other questions in the Q&A box? Oh, hang on, Mark's typed again. So I've got another question from John. Do you have a leaflet that would help a farmer understand the skeleton of what I've told you today? It's almost like you've read our mind, John. So alongside this presentation, Rob has kindly put together a succession planning guide. So I think, Trish, have you got a copy of that now?
I have. Thank you for asking that, John. It's something we discussed right at the outset, wasn't it, Dan and Rob? Yes, there is an overview of this, which we're going to share afterwards with everybody and anybody that wants it.
Yeah, and I think Rob, are we looking to get some printed as well? Is that right?
Yeah, we'll be getting some printed at some point. Yeah.
Yeah, so we'll be able to share some physical copies with you as well. Do we have any other questions?
You've
No, sorry.
amazed everybody.
I've just seen Josephine has raised her hand, so I think I can allow her to talk if she's got
Oh, if you
a
could, that'd be brilliant.
question. Just try and find her. There we go. I think Josephine should be allowed to ask Dan a question now.
Oh, thank you. I couldn't, I was looking at the chat rather than the Q&A and I couldn't get into it. But I do have a question. If a farmer has retired, but he's letting his land to another farmer, will he still get the agricultural relief on that land?
It depends, which sounds
Right.
like a complete cop out. But it depends on what basis he's letting it.
Mhm.
So if it's on a short term basis, typically yes. But if it depends on the type of lease, whether it's an FBT. Certainly, we're seeing a number of landed estates who have historic AHA tenancies trying to get out of those because they only attract 50% relief at the moment, and
Right.
the FBTs can get full relief. So we'd have to look at the specific circumstances on that, but typically there is a way for them to be able to obtain relief. The key really is making sure that it's still in use for agriculture, because certainly when we're looking at gifts, one of the challenges we have is that a parcel of land's being gifted to a family member who's then built houses on it. And at
Yeah.
that point, if they've passed away within those 7 years, that then doesn't qualify for agricultural property relief because it's what the use is at the date of death.
Mm. Okay, thank you very much.
I've just seen that John's raised his hand as well, so I'll allow him to ask a question too.
I think you'll just have to unmute yourself, John.
Can you hear me now?
Yeah, we've got you.
Thank you. I don't know. I haven't been able to see anyone, um, so this connection seems a bit strange. Anyway, thanks so much for what you've told us. But one thing that concerns me, I know it from the personal point of view and more domestic point of view, not farming. Um, the cost of wills and that seems to have shot up. And it's really scary when you ask for a codicil of a will. They say they've got to rewrite it and it costs you £1,000. I don't know what's happening with the accountancy um, business generally, but here in Bexhill in Sussex, um, the little guy in the high street uh, seems to have been gobbled up by the big guy in the nearby big town.
Yeah,
And
unfortunately, that is a challenge with our industry, John. I think it's something. We're a traditional partnership. We're owned by 12 partners, and as a business, we've been around for 170 years. And I've been at a strategy meeting today, actually, and we're I can probably describe us as fiercely independent. We think our clients are better served by the 12 of us making those decisions and acting in their best interest, really, rather than having paymasters down in London or Manchester or wherever it may be dictate our pricing, our strategy and what we should do. So I think you comment on the wills. Yeah, they can be quite costly. I think the challenge I would probably put back to that, and I'm certainly not a lawyer and I'm not benefiting from this, but the cost of getting them wrong can be certainly far in excess of £1,000. So I think it's about being proportionate, really, in those cases.
thank you.
Right, so I can't see any other raised hands or questions, but I will just give one last opportunity for anyone.
It will probably be the case that everyone will think of something as soon as you log off.
Yeah, well, my email address is on the slides, so more than happy for people to get in touch if you do have any questions. But I'd just like to take the opportunity to thank Trish for introducing us to this and giving us the opportunity to speak to all of you. And thanks to everyone for listening and to Rob for putting it together. So I think at that point I'm all done. Trish, I don't know if you wanted to say any closing words, but
No, just to say probably exactly the same as you, and thank you for your side of the contribution. It's been very, very valuable, and very easy to follow as well, Dan, I think, which is the important thing, because it's such a topic, and it's one that, I mean, I'm still a volunteer as well as staff, but it's such a topic that we try and get over to our clients, farmers, friends, whomever. And the way you've described it makes an awful lot of sense and kind of backs up what we keep banging our heads against.
yeah,
So
I mean,
you.
from my perspective, it's all about having a practical approach. I think it's no good me sat there quoting tax legislation at you for an hour, because ultimately you then can't apply it. Whereas something like this, I think, being able to have those conversations can be really valuable.
Yeah, very much so. Very much so. Well, as I say, thank you to both of you for not only for your information, but taking your time out at this time of the evening. I mean, I'm sure you've had a very long day, the pair of you. Thank you to all our volunteers that have jumped on. Great to see so many people attending such an important topic. And hopefully we'll get this overriding leaflet, information page, whatever it is we're going to call it, out to people as soon as possible. So if anyone's got any further questions that you'd like me to put through to Dan, I'm more than happy to act as an intermediary and send things on. But as Dan has said, his email's there for everybody to see. But if you don't get sight of it, do let me know at training@FCN and I will pass that on. So thank you so much, everybody. Have a lovely evening. I don't know what the weather's doing with you, but it's pouring down in the sunshine here, so I've got a beautiful rainbow. So I'll let you go home to your families now, Rob and Dan.
Thanks very much. Have a good
Thanks for
evening,
your
everyone.
time, everyone.
Thank you. Bye.
Cheers.
Bye.